Hey traders, welcome back to the best forex forecast, one of the best, if not the best daily forex forecast, where we tell you where the market is going next to support your trading analysis and to help you avoid series of losing trades. Right. On today's episode, we are talking about the weekly forex forecast. We have talked from Monday, Tuesday, Wednesday, Thursday, and Friday. Today is Friday. I'm recording this on Friday, and yes, this is the end of the week, and we in preparation for the new week coming ahead, which is the week of 20th, the week of what 20th, which is from 21. Then what to expect and how to expect price to deliver. Just as you always know, I give you top-notch explanation about price and where it is going next. So if this is your first time stumbling on this channel, please do subscribe to this channel, comment, like, ask your question, and I'll be very thrilled to give a response. So I just started this channel. If you want to help me grow, you can by subscribing to my channel, like and comment to help the algorithm push my videos to more traders like you as well. So we can also connect via Telegram on this channel description, and let's see what the market has for us going in next week. So this is the dollar index, and this is our weekly market. Just like the previous week, I explained how the market has created a series of buy side and sell side liquidity. Now we have majorly buy side liquidity lying all above these previous week highs, and also we have sell side liquidity lying below here. And this week price delivered lower impulsively fast. This movement lower was very fast and impulsive, and we deliver all the way down to this previous month low, which is an external range liquidity that was read, that is the market read this external range liquidity and delivered higher. So on that note, I have some things I've written on my journal now like to read and explain in order to give more extensive understanding about what I'm looking out for on price. The first thing is the narrative. What is the weekly narrative? What's the weekly narrative? So the dollar index weekly contract has rallied lower, sweep the monthly external range liquidity, read it, and price closed above. And also if you check the previous week, price closed above the candle low, indicating a three drive pattern, meaning that if you look at this particular candle, we close above it, this one too we close above it. That is a three drive pattern, indicating that the next candle coming in, which is the next week candle, is going to be very expansiating candle that is going to deliver more impulsively, just like this week has delivered. This week has delivered, right? So the current week, which is this particular week, creates the high of the week below the external range liquidity, have a close above, take previous week low, but did not give price to the previous week high. So we have previous week high and the current week low as the new buy side and sell side liquidity we can look for. And the more logical reason is that price is going to come for buy side liquidity, since we have taken sell side rate, and price has rejected after tapping after the raid, and price has rejected higher. So that is it for the weekly. Let's go to the daily contract. Now on the daily contract, we see the this is the move. This is the Monday contract. Monday this week, market open, trade lower, close below Friday candle low. What does that mean? A candle close below indicate lower prices, right? We still call out how price is going to come lower, despite price did not get back to close with this candle, creating a fair value gap. Market delivered lower, having a close above. More close below indicate more lower prices, and boom, price delivered and close here. Then the Wednesday candle, we open, go lower, takes the external range liquidity rate, then close above. Now we did not close below previous candle. What does that tell you? A rejection. And this has telling us that there is a rejection in price to go higher. And then the Thursday candle open, delivered higher, trade lower using the lower time frame key level, and delivered higher, close above the Wednesday candle. A close above the indicate higher prices, while a close below indicates lower prices. Now to this Friday, which is today candle, we seen how price delivered and closed above again. What does that tells us is that Monday is going to continue higher prices. But now we are left with what? A key level, which is this fair value gap, and what? A daily internal range liquidity, which is the previous candle low, which is this Friday candle low, is our internal range liquidity, which I'm anticipating for price to sweep it before going higher if we are going to use this key level to support higher prices. And don't forget, we also have the last down close candle that creates a fair value gap, which is an obvious bullish order block on the dollar index. Now, since the market has created in two major key levels, an order block and a fair value gap, all this is telling us the market is willing to go higher. Then the question is, how far can the market go? We have this external range liquidity, which is previous week high, right? I put it as the daily external range liquidity. Now when I have internal range liquidity like this, I mark it because I want markets to use it as an inducement to go higher. Trade below it, takes the liquidity, use it as an inducement, and price into key levels, then go higher. So we have this daily external range liquidity, and we have relative equal highs, which is um a buy side liquidity. We have relative equal highs, but my highest expansion going in next week is this relative equal highs. But I want to start with the previous week high as my main major target on DXY. But so what do we expect the weekly contract to do next week? If normally Monday should price higher, take this previous day high, delivered lower, and maybe fall short of this key level. Tuesday, fill in the key level, takes this daily external internal range liquidity and inducement, and use the key level to go higher. That is Tuesday or Monday, creating the low of the week. Just know that if Monday creates the low of the week, if Monday sweep this, or if Monday retraces back into this key level and takes the internal range liquidity and also close above the Friday candle, then we are going to have a continuous and a more bullish price delivery, meaning that that Monday candle, the way the Monday candle deliver, it is going to tell us how far this next week candle is going to expand, right? This is just it for the daily contract. And on the 4 hourly contract, on this dollar index, I am going to majorly stops on the 4 hour contract because yeah, that is the lowest I can go. Now we see I've been calling out this market. I call this out on Wednesday and price used it on Thursday. Call this out yesterday, but price fall short of tapping into the fair value gap, which leads to the creation of today fair value gap, the daily time frame fair value gap. Price has created, and if we see on that fair value gap, we see a relative equal low, right? If we have relative equal lows like that, that is sell side liquidity. So on the 4 hourly time frame, we can see that it is very easy for Monday candle to sweep this high, right? Sweep it, come lower, tap on the fair value gap, close, or open, come lower, use the fair value gap, then continue going higher, then Tuesday continue the price move. So this is basically what I'm anticipating for the dollar index. Then let's go to the EU, which is the Euro US dollar, right? So um, similarly with the dollar index, Euro has also read the external range liquidity, but Euro create a smart money divergence because Euro delivered higher, tapping on the monthly fair value gap. Use the monthly fair value gap key level, which is this two line is representing monthly fair value gap key level. Euro delivered all the way to that high, taps on that line, then reject, that is the key level, reject price lower, indicating a reversal or a higher time frame key level that reject price lower. And if you look at it this week also, we close above, we close below previous week high, and indicating a three drive pattern also. And we see that this is a liquidity rate that tapped into a key level to reject lower, just like I am explaining using the daily time frame on the dollar index. But let me read what I have on our journal here. I will just read the whole thing, then explain. The EU weekly contract has rallied and read the monthly external range liquidity, which price closed below it, which shows that the move high was a liquidity read and price tapped on the monthly internal range liquidity fair value gap key level and moved lower. The previous bullish move was a read on liquidity, which means the initial bullish move was just a read on liquidity. Now the current candle, which is the current weekly candle, the current weekly candle contract delivered higher prices, rate the external range liquidity, which is used as an inducement, and tapped on the monthly fair value gap internal range liquidity, which reject price lower and closes below previous week high, creating a three drive pattern. It sweep buy side liquidity and leave sell side liquidity untapped. That is, we have taken previous week high buy side liquidity, and now we leave sell side liquidities untapped, which is 1, 2, 3. We have three consecutive uh, external range liquidity. We are looking for price to continue seeking for going in next week and probably next month. Now the key levels, what are the key levels? Now the weekly key level is the weekly candle wick consequent encroachment, which is the 50% of the current weekly candle wick, and it is exactly at the external range liquidity rate. Meaning, whenever, if you've been watching my video, I explained that whenever we have a candle wick like this, we measure the 50% of the wick, and that 50% of the wick is exactly or very close to the external range liquidity rate, and that is why I decided not to add it to the chart, so that I will not have much line. I just want to keep my chart very easy and clean, right? So the weekly contract is liquidity driven. Prices is liquidity driven prices, and the lower time frame key level will be marked as inducement internal range liquidity for external range liquidity delivery, meaning that the weekly contract is just driven by liquidity, and there is no form of what? A fair value gap. We have a fair value gap here if you can look, but we have seen how price continue to fill in that fair value gap, right? So, and create buy side and sell side liquidity. Now we've taken buy side, we are going for sell side. Now we don't really have much, but I want to say something. On the weekly time frame, I am looking for next week if we are going to create a week high, which is the week, if it's going to have a candle week, right? The week should intercept or should close above the candle, above this previous week. This particular week, I want to see market close above it before, sorry, I want to see market wick above it before rejecting lower. So the algorithmic profile for this week. So let's go to the daily time frame before I read what the algorithmic profile for this week is. All right, so this is the daily time frame. The algorithmic profile, the weekly algorithmic profile has Monday as the high or as the low of the week, that used previous week Friday candle lower time frame key level to price higher, and the high. So what I was explaining there is that this particular candle, which is the Monday, which starts the this week, this Monday, the Monday starts the week, we see it prices into the previous week Friday and use the lower time frame. If you want to use higher time frame, it will be the candle week consequent encroachment. Look what I was talking about on the weekly time frame. We use the daily candle consequent encroachment to go higher. Price did not break below it, it just tapped on it and go higher. The candle week consequent encroachment is always an area of liquidity. Price use it to go higher, and also we have a close above, right? Why the high of the week is Wednesday candle that price into monthly candle key level to reject and deliver price lower impulsively, which is this particular candle, which is the Wednesday candle that deliver all the way to this high and close above, sorry, close below the Tuesday candle, showing a rejection in price and price delivered lower. Now, what is my hypothesis based on the weekly time frame? What am I anticipating for next week? The price forecast for next week contract, I am anticipating price should open, which is Monday, delivered and take previous week low, then price into the daily key level, which is also above the Monday 18th September 2025 week candle high, and then price should use the daily key level as inducement rejection and deliver lower prices into the main or institutional order flow as what external range liquidity as the previous week, which is what I'm explaining is that I'm anticipating for price open takes this Monday candle low, then reject price back into the range and use this in daily internal range liquidity on the key level fair value gap plus order block, then use it to reject price lower, delivering price into the institutional order flow entry. Institutional order flow, what is the institutional order flow? It is where institutions are deriving price into. Now currently on the euro US dollar, the institutional order flow is sell side delivery, while on dollar index the institutional order flow is buy side delivery. This is just what you should know, now. This is what very important, that you understand where price is going and where price has been before and how you can anticipate. If you look at today, okay, let me read the daily contract. Now let's read about what happens today. Normally, aside from the weekly contract, I used to do daily videos like this, and so that if you want to receive notification, you can turn on the notification button so that you can continue to receive notification for our daily analysis and our weekly analysis And also we do offer some other form of teaching. If you are looking to understand, you can check my page for that. Video will be coming up soon. The daily contract has rallied higher and reject lower, which is the daily contract narrative, has rejected lower from Wednesday trading, which is the Thursday candle closed below Wednesday candle low, indicating market structure shift, and Friday traded lower, taking Thursday low and close below it, a close below candle. What I mean is this Thursday market open delivered higher and closed below this Wednesday candle low, indicating a market structure shift. And Friday open fall short of the order block and delivered lower, also tapping the below the and also deliver price below the Thursday candle low, indicating what? More lower prices. Now the daily fair value, which is the key level, the daily fair value gap plus the daily bearish order block is the new key level formed on the daily time frame. The Friday candle high, which is the candle internal range liquidity, should act as the inducement for price rate and reject price lower in junction with the key levels. On EU daily contract, which is my hypothesis, on EU daily contract, I am anticipating for Monday contract to sweep today low, and which is the external range liquidity or inducement, to deliver price into the key level, and Tuesday to continue price lower into the EU higher time frame institutional order flow for weekly external range liquidities. So you already know what I'm anticipating for, that price should open, takes this low, deliver higher, use this as an inducement, tap on the key level, then continue to follow the weekly or the institutional order flow. Now, in relationship with the dollar index, if Monday did not deliver into the key level, then it should have a close above Friday candle low, which will indicate that Tuesday will deliver price into the key level and also close below Monday and today Friday candle high, as price reject the daily order block and fair value gap key level, right? If that is, price should trade here, reject, and continue to come lower. But there's something I added here that you need to pay attention to. Otherwise, right, if Monday or Tuesday rally above the daily key level, then there is a confirmation of a change in the institutional order flow for us to witness, because some people will see this as order block. Yeah, it is an order block, but we have traded to the 50% of the order block, which render it what? A weak, like, which render it not a strong order block. And also we have a fair value gap. Some people still have a trade entry here with a stop below here, thinking this market is still bullish. But if it is actually bullish, we should see Monday or Tuesday have an up close candle that close above, a close above candle on that close above this particular Friday candle. That means price is still bullish, right? That is the only way we can confirm that price is bullish. So let's go to the 4-hourly contract. Right, so I'm not going to say much on this 4-hourly contract because we already know what price is more likely to do. On the 4-hourly contract, we see clearly the market has broken it. With this particular candle, this up close candle is a bearish order block, so which is also inside or also in conjunction with the daily fair value gap and the daily internal range liquidity inducement high, inducement buy side liquidity. So there is a more likely times that price is going to reject here and go higher, maybe fall short of this internal external range liquidity, which is the previous day low, and come higher, use the key level then before we see this low read, and consequently we seek for weekly external range liquidity. So on that note, let's go to um the GBP, which is the pound dollar. So on GBP we have SMT divergence already. The GBP fall short. The GBP did not price above this high, and the dollar or an EU price above it. This is an SMT with the dollar, but we have seen a close below, also confirming that there is a market. This candle close below, also confirming that there is a bearishness in the GBP, which is the cable is now price is now bearish. Now on the monthly, I just marked here, we have the 50% of the monthly candle range. Here we have the 50%, which is will be our first major target. I'm going to take a trade on GBP next week, and it's going to be a long position trade, and I'm going to share it on our channel as usual. So I'm anticipating for this as our first target, then consequently this external range liquidity as the overall target. Let's go on a daily time frame and see how where we are going to expect price to come all the way before we go lower. Now on the daily time frame, we see a very today Friday candle was very bearish. Like we even closed almost below this. This is the market structure shift, and also we have a bearish order block. This two that up close candle is a bearish order block, and if price on the GBP, I'm not in support of price coming all the way back to this fair value gap. GBP is going to have an SMT divergence with the dollar and EU, sorry, and EU, yes, with the dollar and EU on this high. We are not going to read this high, and that is what normally GBP will do. We are not going to read this high, and GBP will deliver lower if the institutional order flow still remain intact. On EU, if you watch my previous video, I call this as an order block. Now look at how price has delivered into the 50% of the order block. What does that indicate? That is, the order block is not strong enough to support a continuation in price, and the market is following an institutional order flow drill. This is where majorly ICT traders or some people that trade ICT and don't know what they are doing, they do something, they just follow, they don't follow narrative, they follow fair value gap and order block and all, and then they get their ass handed to them. So this is our 50%, and below that our 50% we have a very external range lower time frame, which is the daily time frame external range liquidity, which is the very sweet and cookie cutter for next week to see price read for. So let's go to the hourly time frame now on the EU, right? This fair value gap, this 4 hourly fair value gap is my most uh area of where I want to see price reject and go lower, right? So I want to see price reject this area and go lower, and not this all the way back to this area. Well, we can still have markets get here depending on how the dollar is going to retrace, but with the way price is delivering very impulsively lower, there's high chances we are not going to see price come all the way back to this area on the pound dollar. So on that being said, let's go to Bitcoin and end our analysis here. Now fuck and end our analysis here. So I need to take something out of the way. So let's go to the weekly contract. I've been telling you guys about Bitcoin all this while, that I'm anticipating for Bitcoin to be bearish, right? But now there is a signature in price indicating bearishness on Bitcoin US dollar. We have seen this candle high rate, right? And we have our order block here, but this order block 50% has been traded into, meaning this order block is weak, and price might still continue going higher, right? But we We also have a fair value gap here, but the market has not closed yet. We still have Saturday and Sunday, just so you know that Bitcoin does not close. But for this week, we still have a fair value gap here, which market might be tapped into and continue to go higher. But due to this rejection we see in price, if Monday, which is sorry, if Monday did not close above, did not have a close above, if Monday have a close below like the daily time frame, on the daily time frame, that means we are going to continue to see lower prices, and that will confirm my bet on Bitcoin, and I'm going to still share that trade on our channel when I am taking the trade. Right now we have a close on the daily time frame. We have seen a liquidity raid. We have a close below, indicating a market structure shift on the lower time frame, on the daily time frame, which we cannot just conclude yet until we see Monday, not Saturday and Sunday candle close. Oh, we want to see Monday candle close, because that is what I'm more interested in. If the Monday candle close below, close and take all this liquidity, then I will support price to continue to go lower, and this will be our first, not even, this will be our first target on Bitcoin if we're going to sell the Bitcoin. So on the lower time frame, right, so I already have something written here with this particular candle high will be our inducement and our internal range liquidity on the 4-hourly time frame. We have a small fair value gap there, and also we have a swing high, a swing low in conjunction with our hourly order block, sorry, our 4-hour order block with a market structure shift. Right, all this with a daily, which that daily market structure shift, all this, right, supporting lower prices. But until we close below this line, this external range liquidity, which is the smaller time frame what target, until we close below here, that is when we are going to have a full confirmation, which is a body close, not a wick, not market will wick here before going higher. No, I want to see close, a close below, then I am going to now support that. Okay, we are going to continue to see lower prices on the Bitcoin market. Thank you so much for joining on this video, for coming to watch our daily video, our weekly contract. Please, again, once again, if this is the first time you are stumbling on this channel, subscribe, like, and turn on the notification button to get more of our daily insight like this. Thank you so much, and see you Monday.